we're now going to let you guys decide the order of this panel. We're delighted to have Vivek Kaushal from Global Jet Capital coming up the front. Mike Dwyer, who's sort of taking a roundabout climbing over chairs approach. And Eric Jullien from Airbus Corporate Jets on stage. And what we're going to do now is look at the big megatrends. But before we do that, Mike, I think on behalf of everyone, Guardian Jet had a terrible loss last week. You lost Casey Craft and one of your team in the American Eagle crash last week. So I think we'd all like to pass on our thoughts to you guys.
Thank you very much. The support for Casey has been overwhelming. I just want to make a plug for the family. There's up to 3 now GoFundMes. If you go to Guardian Jet, we have dedicated a fund that's just from the aviation community. So, guardianjet.com. And by the way, there's a number of people in the audience that have already generously donated. But if there's any in the future, that would be wonderful. The family, Casey was incredibly well disciplined. His family will be fine once they get over, if they get over the loss. But he was very switched on and a smart guy, and tremendous support from local families. So thank you for all your condolences.
Yeah, we're all very sorry for you. If we shift to the Slido vote, we'd like you guys to choose. We've come up with 6 key trends in the market, and we'd like you to cover the one that you think's most important. Okay, green aviation. Vivek, let's stick with green aviation before it changes. What's your thoughts on this? One of the interesting things about Global Jet Capital is you're out in the capital markets, you're raising money. We heard from Holger this morning about the EU taxonomy, which does sound like the most boring thing in the world.
Yeah, we've seen over the last 4 or 5 years, the issue first rise to the point where, you couldn't be in an investor presentation and not have a page explicitly talk about, the green issues around business aviation and what we were doing about it. And, we were doing our bit as financiers. There's not a whole lot that you can do. But at the same time, we do have a carbon offset program. We're working with our clients on whatever's possible. We're moving the fleet to newer aircraft with more fuel efficient engines. So we're doing our bit. But lately, it's come down. You don't get that question as much in investor presentations, and at some level, there's an acceptance that this is just going to take more time, right? And in my mind, that's okay. You go back to 1903, Orville Wright took the first powered flight. Guess how long that flight was?
8 seconds.
12 seconds.
I was round about that.
120 feet, right? And 24 years later, Charles Lindbergh crossed the Atlantic, right? 24 years later. That flight lasted 33 hours and 30 minutes, right? 24 years after that, you could cross the Atlantic in 8 hours, right? And so this tends to be nonlinear. And there's people here in this room that are working on this problem, people outside this room working on this problem, OEMs working on this problem. It's gonna get solved. And 2050 doesn't feel like it's that far away, but it could be, it's a lifetime when you think about technological innovation.
Eric, Airbus is doing an awful lot in this area.
Yes, absolutely. We are fortunate to be part of a large commercial aircraft manufacturer. So we are benefiting, of course, from all the efforts and investments from Airbus commercial aircraft. And on top of that, we are looking at specific initiatives aimed at business aviation and aimed at creating critical mass within our customers operating, for example, SAF, book and claim, and projects like this.
Airbus has obviously announced a lot of R&D into hydrogen. Have you had any ACJ customers asking you about hydrogen as a future?
Not yet. No, not yet.
Mike, it's great to have you because you have an amazing book of Fortune 500 clients. You do, you guys in the States. Have you noticed a shift in the last, 8 weeks, or is it 12 weeks now? I can't remember when the election was.
So, there's been an uptick. We're a little nervous about this week, but there's been an uptick in optimism, certainly, from the election. I do want to touch the green just for a second, even though, I just kind of look at the business transactionally. We're seeing a lot of different choices being made by our buyers. So first of all, if you break it down into corporate and high net worth, the corporate are more prone to missionize their fleet. Instead of having 4 of the biggest, baddest, longest range birds because they can afford it, they're getting into smaller equipment to pair with their long range. You're also seeing the high net worth individuals. It's absolutely coming into their decision making, especially if they have a partner who is maybe more socially motivated. And I also think it's going to encourage the shared ownership programs where they feel less of an intrusion on carbon offset by being a Vista or a NetJets or a Flex participant. So we're certainly seeing a lot in the transactions.
Are you seeing, and you haven't seen a shift, because over here we're seeing headlines about DEI being over, and you haven't seen a shift in customers amongst their attitudes towards green flying?
No, I think it's too soon. I mean, no.
Okay. Shall we tackle the people problem? This has been a huge issue. I think when we talk about supply chain issues, we're often talking about shortage of people at suppliers. Would you agree with that?
We see the supply of, the shortage of people on several sectors. Obviously on the construction side with operators. So yes, there is an issue. Then talking about the operators, what we see as well with ACJ benefiting from a type rating of the airliner, we see there is a flow of candidates moving from one sector, commercial aviation, to business aviation. So this is a bit less of an issue. On going back to supply chain and manufacturing, we are ramping up since COVID, and we see that it's a whole organization. It's not just a people issue. And for us, of course, the focus is as well to attract talents and to retain talents.
And are there any signs of, I know Airbus Commercial didn't deliver as many aircraft as it wished last year. I think all of the business jet OEMs would have liked to have got a few more out the door. Do you see signs of it improving?
Oh yes, definitely. And just to go on the exact figure, we were 5 aircraft short of a target, 765 to 770. So
yeah, I was maybe a bit harsh.
It was not bad. Thank you.
I'm being unfair. Mike, when you're doing a PPI or when you've got an aircraft through, you're having massive delays waiting for parts, aren't you? Or loaner engines, or are you seeing any signs of it getting better?
No, I'd say kind of the opposite. So here's what we're seeing at both the OEM and the big MRO level is the shortage of techs is bringing. We saw several years ago. We saw the big shift in the big interval, the 6 to 8 year inspections that were punching 7 figures and north of that, and stretching now to months instead of weeks, or 6, 8, 10 weeks was long. Now that's not. Now we're seeing it peel back into 24-month inspections where they can't get their airplanes out of service. If you look at, one of the concerns I have is about the cost of flying. If you look at the direct operating costs, we used to say a large cabin was $3 million a year to operate. That's your budget. It's 4 to 5 now. And by the way, your biggest direct operating cost in operating an airplane is fuel. That hasn't moved. We're still calculating $5 or $6 a gallon. So you look at what the cost of the engine overhauls are, which is a function of skilled labor. You look at the big interval inspections. You look at the price of the airplane. Is 10 to 15 years ago, you saw the biggest. You could buy the biggest airplane on the block for $40, $50 million. That's doubled. Run 15 years at 2.5% inflation. Vivek's better with numbers than me, but that's about 50%. We've doubled, so that's what our concern is, and we think it's directly related to We all talk about the pilot shortage. The tech shortage, I think, is more critical.
Vivek, I think the cost angle is a nice one. Lots of people can buy a business jet, can't they? But a smaller number can afford to keep one. When you're doing your customer analysis, are you concerned about inflation?
You know, our clientele works with a margin of safety that we don't think that inflation's an issue. I think what's an issue is their level of satisfaction, to be honest with you. I mean, when you have people contending with the level of downtime that they have to contend with today, I think that creates a level of disengagement with the product, which I frankly worry about more long-term than anything immediate. I mean, I feel for the manufacturers and for the MROs. I think they're dealing with a very complex issue. I think the reasons for it got really exacerbated by COVID, where you had, you know, what's usually sort of a peaceful transfer over generations of culture and norms, and you know, and so everything's kind of fundamentally different now. They're doing a lot to fix it, but it just takes time. I mean, I think it'll take a few more years before that whole workplace balance is restored and you've got people that can deliver. The other thing that's happened is, in my opinion, that the aircraft have just gotten bigger and more complex. You know, there's more electronics on board, there's more, you know, opportunities for corrosion based on all the different places these planes go now. And so that is adding to the complexity of every maintenance event. You know, we used to have a post-lease inspection used to be a relatively straightforward exercise. It takes twice as long as it used to before.
Any thoughts on aircraft getting more complex? And
I mean, we are not significant in terms of complexity for the business aviation market, because, as you know, we're using an airliner platform, which goes back as well to the supply of spare parts, where we can tap on AOG basis or simply on a scheduled maintenance the part from any airline storage. We see complexity more in a cabin, but then again, a customer that pays that amount of money, it's only fair that he gets the sophistication in terms of system, in terms of design, materials that he would expect in his yacht or in his house. So on the ACJ side, we see the complexity in the cabins, and thanks to the standardization coming from an airline DNA, we feel the platform is less affected.
Mike, you obviously were an OEM for many years. Do you feel that, and one of the rules of business aviation has always been that you could rely on customers to be very brand loyal, probably from the start of the industry. Do you see any signs of that changing with owners getting frustrated? We had that great session from Carl looking at, saying about aftercare being an area where customers are frustrated, and it's an impossible challenge when your suppliers can't do it. But do you think we could see that customers become less or become more fickle?
I'm not sure fickle's a word, but I think there's a spectrum you got to walk through. If you look at the sophisticated customers, I would suggest that the OEM product support conversation has become more balanced, where you used to have like clear winners that were runaways, and depending on the polling, and we could talk an hour about that. But yes, the level of sophistication, they can have some frustration wherever you go because of supply chain and all the things we've talked about. Then you've also got the unsophisticated, relatively new buyer, and I think as an industry, we've made great strides for that. If you look at the management companies now and the outstanding job that especially the big ones are doing with the transparency, the reporting. I mean, you can find out what your pilot had for breakfast the day after the trip. It's so fast now. And then a little shout out for my friend Craig Ross here at Aviation Portfolio, helping, first-time owners and individual owners, and now even fleet owners, manage their experience in an uncharted territory for them. So I think we've made huge strides in that direction, because these people are used to bad news, and we're just giving it to them in a more immediate, palatable format. So that's kind of my view of support.
For that, you're not finding, I think we talk, it's easy to talk an industry up. It's also easy to talk it down. I think we all know there's issues with MRO shops, there's issues with parts, but it's great to point out that they're across the board. You're not losing, and I think Carl touched on this, you're not losing customers going back to commercial airlines because that experience is just as bad, isn't it?
No. If anything, people are using business aviation more is what we're seeing.
And you agree, Mike?
Yes.
Eric?
Yes, as well.
Okay. Let's talk about going bigger. When you were at Gulfstream, you would never have imagined how big aircraft are now and the range. Are you surprised that the demand for large aircraft seems to just keep going?
Yeah, and again, that's where I'm just back to the concern about the pricing, right? I mean, you mentioned the G550 in 2008, 9, 10. That had a $40 to $50 million swing between the high and low market buying new, and look now at the biggest cat on the block. By the way, there's some OEMs in here that I'm begging them to go back to the tough airplanes, the really high utility light jet or 8-seat, just get after it, and really low DOCs and reliability. And it's hard to get their attention, right? It's hard to get their attention because of what they can do on the return on investment. It's not that much more money. I shouldn't speak, Steve will kick me, but to develop a bigger airplane than a little one, right? I mean, if you look at the time it takes to certify an airframe and a power plant and an avionics suite, right? So anyway, that's what I'd love to see us go back. I mean, I started in CJs, right? So it's a great hotbed of moving people up. But it's also counteracted by the trend of first-time buyers now jumping into ultra-long-range equipment because they're coming out of Vista, NetJets, Flex, really, really popular, wheels up, really, really well-run, well-done programs. So they're skipping that light to mid-size.
Eric, you're completely biased on this, but do you see anything stopping demand for larger cabin aircraft?
No, obviously, due to our business model, we are right in the middle of it. What we believe, according to our marketing studies, looking at the world fleet on a given year, is 99% of the flights were less than 5,000 nautical miles. So our product range sits beyond that. So we believe that a lot of aircraft were bought for capacity and not for range. And for us now, the challenge and the next frontier is to move our product range down with a 220 and bring that wide body capacity to the budget of an ultra-large jet.
Just I love statistics. Just go back to 2010, the Dow was 10,000. Look at it now. In 1 year, the population of billionaires grew by 27%. There's plenty of money out there.
You, as a financier, also are quite biased. You love a bigger plane.
Sort of. I think it just like for a OEM, the costs of developing plane are not that different based on capacity. The cost for closing a deal or the time it takes to close a deal is virtually the same between a smaller and large. But that's not the point. I think, look, super mid's clearly having a moment. Okay, I mean, you see that market. It's been very, very strong for a while, continues to be strong. But to be honest with you, large cabin's okay. I mean, I think the way I look at it, it's more about like broad demand and supply. I think it's in balance. You look at the order books, it's in balance. Everybody's got sort of their book to bill in the 1:0 ratio. And one thing that people sort of may not have picked up on in the Gulfstream, the GD, earnings that came out is that they actually took in 10% plus more orders in the fourth quarter last year, even though the book-to-bill ratio went down because they're delivering, obviously, the G700s. So in terms of popularity, I kind of agree with Eric. It's as much about capacity as it is about range and creature comforts. And I frankly think that there's probably an expanding user base. When we have off-lease aircraft come back, we find a ready market for them. We don't have an issue with large cabin aircraft remarketing them. Even at the higher price points, there's plenty of market because I mean, these are just high capability aircraft. And to some extent, the fact that the entry price has now gone up, well into the 50s for a G600, and then you just kind of go up from there. I think it's just longer term, the market's going to be okay. And even when you look at like the NetJets of the world, they are going to need to bring in at least some capacity to serve their existing client base. Every mission is not going to get flown on a 3500 or a 350 or a Latitude or a Praetor. They're going to need some longer range aircraft to keep those missions in-house.
Vivek's a lot more bullish now he's not chief credit officer. When he was chief credit officer, he was always worried, but now he hands the worrying on to someone else, and you don't have to worry. Mike, you're not worried, and I think the obvious question would be, we've got all these new, we've got the Global 8000 coming, we've got the Falcon, we've got the Gulfstream 800, but there's not. They've all got good backlogs. We've got the ACJ 220 as well. They've all got good backlogs. ACJ had a fantastic, your best ever year last year, wasn't it? Which was a terrible mistake because you should have held some back for this year, but or maybe you did. Maybe this is going to be a great year, and your top draw, you've got but it doesn't seem like there's anything to worry about in the large cabin, does it?
So,
famous last words.
Not at all, but again, being the smallest businessman in the couch here, we just think of transaction and growing our business, right? The best thing that the OEMs have done with us with these lead times is now a stable pre-owned market of outstanding inventory come. So we're very happy.
Are you at all concerned that OEMs are going to ramp up production?
No, that's more deals. I mean...
Yeah.
Vivek, you're not worried. There's no sign of it, is there?
Yeah, it's just really hard to do. I'll be honest with you. I think Embraer has probably done the most in the last few years, but again, they're doing it in response to very heavy demand. But look, it's a hard thing to scale in both directions. So if there's a demand downturn, equally, it's going to be challenging. But now that you've got 2 years of backlog, there's definitely more cushion there than there's been for a good while.
Part of the Embraer strategy is they now work 4 quarters of the year rather than just one. No. Any questions in the room or comments? Okay, let's move on to simplifying aviation. There seems to be a lot of interest in fractionals. There's a lot of interest in programs. Do you see that as a significant trend?
We see fractional has several benefits apart from the ownership benefit. In a way, especially in Europe, about hiding ownership, hiding who's a beneficial owner. We believe our friends from management companies as well have a great role to play to protect the owners in terms of scrutiny, in terms of business aviation ownership. To go back to fractional, again, looking at what we put on the market with a 220, where you're looking at the same capex or same investment risk, lower operating cost. We believe it could fit in a value proposition of a fractional. Having some discussions did not come to fruition yet, but we believe we can bring something different, and we believe in a fractional, obviously.
So we're big fans of as few links in the chain between ownership and operational control. The fewer, the better. That's why we like fractional so much. That's why we like. But as I already alluded to, I think the landscape's much better for first-time new owners. The ones that I worry about are the people Google searching a charter flight. That first touch into our business. We're always sending, our charter customers, because we get asked to, kind of the big 3 or the big 4, because you're safe and you're audited and I'm nervous about the first person just, in the next generation, just Googling charter, and they're getting somebody that knows a little more than they do, and they're very charming and they're very smart, and they're putting them on airplanes, and there could be 2 to 3 or 4 links in that ownership operational control chain, and that's what scares me. The people just starting to touch our industry.
Why don't you start Guardian Jet Charter?
We've got too much in our swim lane.
It's because you don't want that call at 1 a.m. about the car not arriving. It's a completely asleep thing, isn't it, honestly?
Gabe and Meg are here. I'll let them worry about that.
Vivek?
I think it's been great for our industry. I think it's expanded the user base. Definitively, it's lowered barriers to entry, and I think it's also really improved utilization. So you've got the likes of NetJets and VistaJet, really working on extracting more hours out of their aircraft. Flying fewer dead legs, which by the way is very green too, right? When you think about it, and I think all those are just real positives. You're grooming a generation that in time will start to use these planes where they will move into whole aircraft ownership. As a lessor, I think they will be very receptive to the idea of leasing because they've already learned not to own, right? And to use aviation as a service. So from our perspective, it's just been a great development within the industry, and frankly, I think it's fueling the expansion that we're seeing today.
Are you pleased? I know you weren't at Global Jet Capital at the start. They acquired you. They acquired GE's portfolio just to get you. I know you told me that. But
I did not.
did you? Are you? And I know at GE you had operating leasing but are you surprised at how quickly operating leases worked across the world? Because there were always doubts about whether Middle Eastern customers or Asian customers would want to operate lease.
Not surprised at all. Once people understand the value proposition, it's about how it fits into their operating world. But for the most part, we see, unless somebody's really hung up about ownership, that nobody wants to lock up that much amount of capital in a depreciating asset. And when you think about higher rate environment, higher IRR hurdles on everything, right? And you think about a company where if you wanted to invest $25 million in a software project, you'd get subjected to endless scrutiny. I mean, it would take you a year and a half to get that project approved, right? So to us, this is all going to just accelerate the move towards variabilizing the cost of capital, right? Fixing it, variabilizing it over the period that you operate the asset, and finding a way to seamlessly move into the next one. And especially for people that are coming up through the fractional space, through the aircraft as a service space, this is going to make complete sense.
Mike, your thoughts on?
So just as a plug for Vivek, I go back to that spectrum of very sophisticated and not sophisticated or new owners. We teach in our consulting, we make the bold claim that if you manage your asset correctly, it will save you millions of dollars over the life of the asset. The moment you go to Vivek and an operating lease, you've managed the asset. I mean, you fast forward to not making mistakes. There's a price to pay, there's an interest rate to pay, but that is a small percentage of what you could do if you manage that asset improperly. The old sin and repent theory of owning equipment, which we've all seen.
Which is perfect that you mentioned your consultancy, because we have a question, and I'm going to let you have this one. Actually, you can all chip in, because I know what you're going to say about ACJs and depreciation. What are the main operating costs? And can you provide a rough split between fuel, connectivity, maintenance?
No, it's easy. It used to be the fuel was half, and then maintenance and engine reserves were 25% each. So now you've seen it not quite double, but almost double, and fuel hasn't moved. So that what we touched on there. Also moved to the fixed side, which is in an annual budget. The pilot salaries from the shortage have doubled on the big equipment. We'll look at what they're paying new airline pilots. Pilot costs have doubled. Payroll is your biggest fixed cost in an airplane budget. Believe it or not, even because the maintenance is interval driven, right? But your annual cost of punching out $500,000, $600,000, $700,000 a year to keep 4 people happy in an airplane, that's the way we look at it.
And depreciation?
Depreciation, we're still seeing, again, we don't use fair market value depreciation and I'm not talking about tax or what the laws will be. We expect bonus to come back. But if you look at the fair market value depreciation, we don't use that as a way to say, here's what your plane's worth in 5 years or 10 years. That Vivek has the nerve to do that. What we do is say, you should look at, some airplanes depreciate better or worse than their peers so that you're using it as decision-making criteria of what to buy today. Because if I'm just 1 point better a year in a 5 to 10 year life cycle, that's 5 to 10% of this, accelerating capital cost. So that's kind of how we look at it.
If you're doing a rough budget, would you say 10%, 8% depreciation?
We use $220 a day per $1 million of value. And then you're going to see that swing to 4 to 5 on a really strong model in demand. And by the way, that can change over the life cycle of the model. Remember, the 550 ran 18, 19 years of production. So you'll see it swing inside models, but yeah, 8% is your average.
Vivek, thoughts on costs or depreciation?
Yeah, I mean, depreciation for us is more of a longer-term view. We think of the world as like an aircraft having a 30-year useful life. And so, you base your depreciation off that. And then, of course, there's variation between models that you take into account. And I mean, the math is not difficult when you think about it that way.
And are you still confident on a 30-year economic life for an aircraft? I'm just thinking, and if you look, there's tons of 30-year-old aircraft flying. But if you look at cars you would have said 10 years ago have a 30-year economic life, and now that's coming down a lot lower. Do you have any concerns that aircraft could come down to 25 or 20?
Just the utilization of a plane, 300 to 400 hours a year, you don't hit those maintenance events, right, that really shorten potentially the life of the plane. So we don't have any real long-term concerns. I mean, you look at the delivery rates are about, 4% of the total fleet. When you break that down, the category is expanding about 1% a year. So on a net basis, replacement demand is about 3% a year. So that lines right up with a 30-year useful life. So when you triangulate, it still holds up.
Did you want to talk about costs, Eric?
Yeah, I mean, of course, pet subject residual values. The way we see that is that we're looking basically the SCJ values, they're going to have a floor that is after an aircraft like 15, 18 years, and we saw that. You're going to have the engines that are not even at half-life, same thing for main components. So there is a value in the aircraft where you're never going to be below, provided, of course, the aircraft is properly maintained. So we would say 2% is a bit of bullish, but in a worst-case scenario, and we have looked at the market, you're going to look at something like 4%, and that's kind of a trend line that we see.
Mike, you've got a provocative question. Bear in mind, we have a lot of engine program companies in the room. Given the increased prices and lack of loaners, are engine programs still worth it?
So even more immediate concern, tonight I'm having dinner with, and I think they're going to buy me drinks before that, with JSSI, so I love engine programs.
You can't buy him, but you can rent him.
Yeah.
Isn't it?
Having said that, the answer on an engine program now is it depends. And by the way, that's coming from a consultant bias that loved them, right? Kind of like a lessor. I mean, the airplane's worth more, the asset's more liquid, it's more easily convertible to cash, loved them. Now when you look at the escalation in pricing, which is driven by the overhauls, not the engine program people, but the cost of the overhaul, you kind of got to start to look at that and say, okay, is this as important in warranty is out? Is it, where does it, remember that a corporate guy buying new, which is our biggest new buyers, the buyer of their airplane at the end of life is a high net worth individual flying 150 to 200 hours a year. He can't swallow a 400-hour a year minimum. So the answers become it depends. I'm still absolutely favor on whole. New engine model, something like that, oh my gosh, get on. But yeah, it's not as easy a question as it was.
I think the new engine models are a big driver from our perspective. I mean, you look at those engines; they're still early in their life cycle. Some of them are seeing, issues. And from our perspective, I think it's the right thing to do for the operators, to be honest. I mean, we can underwrite either way, but when you think about the disruption to an operator who's not got the engines on program, finds themselves last in order of priority when the engine has to come off the frame, it's not pretty. And these engine events now take not weeks but months.
Okay, this is great. Any more questions from the audience or old school questions? Okay. Finally, how are you feeling about the rest of 20? Oh, sorry, we've got a slider question. Do you know, it's about engine programs. We're going to cover it tomorrow in the engine program, the relevance of buy-ins. We'll save that for tomorrow. How are you feeling about demand for 2025? You guys had a great year in 2024. Do you see any signs of it changing?
We see that this is going to continue. We see Europe obviously being a weak market for many reasons that were discussed during these last days. The Middle East is clearly pulling demand. We have seen as well a lot of movements more on the used ACJs going towards Southeast Asia. And these are people that one day are going to move to new ones. We see some, only talking for ACJs going out of China, going to new owners on other continents. And for us, the next new frontier, literally speaking, is going to be the US market.
The US market?
Yeah, that's something where we want to be more present. We have a big team and we want to continue there.
And you've got a really cool deal you're not allowed to talk about, and I won't ask you about it, but it does involve basketball. Mike, what's your thoughts on 2025?
Our business plan, we just delivered to the crew, identical to last year, which was almost 30% growth, 27%. So we're bullish. It's very, very excited.
And that's on a mixture of consultancy and...
Correct, but the consultancy drives the transactions, so it's transactional.
And are you particularly interested in... Look, the US is still seeing a lot of demand. Okay, we don't know about yesterday.
I still think the U.S. is the biggest market that will drive the availability and be very strong. But Gabe's here with us, blowing up Latin America. Meg's cracking Europe open, so we're just very excited globally.
Vivek?
Yeah, I'll echo Mike. I think we entered the year strong, nice backlog, nice pipeline. Lots of good conversations at the start of the year. The tariff kerfuffle notwithstanding, and a lot of the same trends that Mike you're seeing. We're seeing as well. International is big for us. We did nearly half our volume last year outside of the U.S., which is a first for us, and we just expect that to continue. And
with your risk hat on. You're going back to what?
Look, we pick our spots. We're never going to be all things to all people, but it is a relatively target-rich environment. We think that it was disproportionately impacted by COVID. It took a while to come back, but now it's back.
And on that cheery note, lunch is outside, hosted by Eldridge Capital Management. Thank you.